Welcome back to another video, and today we're going to be talking about capital gains and what the implications are for home sellers. So let's get into it. So first, of course, what are capital gains? Now, capital gains are a tax from when you own an asset and you're selling it after any period of time. It could be on stocks, real estate, but the government will take anywhere from 0, 15 to 20% of the profit based off those capital gains. Now, what are the capital gains tax on a primary residence is the question. Now, there are many factors that go into this, like your income tax bracket, your marital status, how long you've been in the house, whether it's a primary dwelling, second home, and so on. So there's a lot that goes into it on how the IRS determines what kind of capital gains tax and bracket you'll fall under. Now, calculating the capital gains tax on a rental property, now they take depreciation into account for rental property. So if you've claimed any depreciation, that will go into it as well to recapture the tax. Now, assume you purchase a home for $350,000, sold for $700,000. Now, if your profit includes depreciation reported as a business expense, the IRS will apply a 25% recapture or depreciation recapture tax on that amount. So the government is always going to want their cut. Surprising, I know. Now, there are ways to avoid capital gains tax, and we're going to talk about a couple of those ways. So the first thing being would be establishing the property as a rental so you don't have to sell it. Another way is looking at seeing if you're in an opportunity zone. If you own the property for more than 10 years, there are tax benefits where you won't be taxed in opportunity zones. So it's important to look at where you are, what the location of the house is. You can also 1031 exchange it if you're looking to sell it. Now, a 1031 exchange is where you're going to sell that property and then you're going to roll that tax into another property of the similar stature, so you don't have to pay tax. It's pretty much just pushed off and prolonged. So whenever you sell everything all together in the future, then that's when that tax is due. So you can always roll that over to avoid paying the taxes in between. Now, you can also look at deducting costs like expenses, improvements, upgrades, any kind of legal, professional, advertising fees. So you can talk to an accountant about that as well. But those are capital gains in a nutshell. If you're looking to avoid capital gains altogether, here at Pezon Properties, we'd love to consult with you. We can go over an offer on your home, even if it is a home that's distressed. We're a solutions-based company, so we'd love to help. So if you are looking to sell the property and get the most out of your home, I'd highly recommend giving us a call here at Pezon Properties, and we'd be glad to discuss it with you to help you come out on top. Thanks so much for watching, and I hope you have a great rest of the day.